All right, we're coming up on the dinner hour here on the East Coast, so let's combine business with some pleasure. Let's say you're the CEO of a major food company. You want to build shareholder value, but you face pressures from commodity prices and the rise of private label competition. So how do you do it? Well, let's find out. Let's turn to Alexia Howard, senior analyst at Sanford, Bernstein & Company, expert in the world of packaged food. You're like, that's a very long description, but it is exactly. I was noting how many packaged food companies there are. There are a lot of them and a lot on the shelf.
Absolutely. It's actually still one of the most fragmented consumer staples sectors out there.
Well, you know, and that feeds into the first topic, which is what is Walmart doing to kind of figure out how to maximize their position as this behemoth in the packaged food industry, right? Because they've got a whole program called Win, Play, Show. What is it, and why is it important for anyone investing in packaged food?
It's part of a number of initiatives that Walmart's going after right now. Walmart's trying to get more exposed to private label. That's one of their initiatives. Win, Play, Show is all about identifying which food categories they really want to focus on, which ones are the most profitable for them, which are the ones where they already have a dominant market share position relative to other retailers, so consumers really know that they're credible in that area. It's really things like sort of confectionery, the cereals aisle, that kind of thing, where Walmart can really shine. And what they're doing now is going very systematically through the stores and basically figuring out how much space should we allocate to each of these categories, depending upon whether they're win categories that they really want to focus on, or whether they're ones that they really just want to dabble in because they have to be in it just to have an all under one roof kind of offer. Now, that's going to have a very major impact potentially on the food companies, because clearly if you're in more of the win categories, such as Kellogg might be, then you're obviously going to do rather well. Whereas if you're in some of the less attractive categories, the ones that are slower growing or where Walmart doesn't really see an advantage, they're going to be de-emphasizing those a lot more.
All right. Well, you see, you provide me with the best segue, because that's what I want to talk about is Kellogg and how a company like that is affected by what's going on at Walmart. Because what are we talking about? A fifth of Kellogg's sales, global sales, are through the Walmart channel.
Right, yes.
So anything that Walmart does is going to affect Kellogg.
Absolutely. That would be true of all the branded food manufacturers here in the U.S. It's generally a very important customer.
All right, so tell us about what's going on with Kellogg, because they have been taking market share away from their biggest competitor, right, General Mills.
It's been going back and forth. It's the big tug of war in cereals over the last year and a half. General Mills had the upper hand last year because they weren't taking as much pricing as Kellogg did. Then back in March, April, Kellogg started to get the upper hand again, and for a few months there, Kellogg was actually gaining share. The last couple of months, General Mills has inched back again, but I think that's because of the year-on-year comparables, the way that they behaved with promotional spending a year ago. And I think in the back half of the year, we're actually going to see Kellogg reestablish itself.
All right. Now, what about Kellogg's business in some emerging markets? We were talking earlier with Kevin Shaknovsky. He was talking about emerging markets being a sweet spot for global growth. What about Kellogg? I know they've got a big business in Latin America for them.
That's a really important part of the story for Kellogg. It's very unusual for food companies or any staples companies to have higher margins in emerging markets than they do in the core domestic business. But Kellogg is one of those unusual examples, particularly in Latin America. They've got a very, very profitable cereals business down there. And that's basically because they have such a high dominant market share position in cereals. Now, that's also a great growth engine for them as well, because the volume growth down there still going very strong despite the macroeconomic slowdown. And in terms of the potential for shareholder value creation, it's a nice little financial earnings engine for them. So that's a big part of the story, I think, or the future story for Kellogg.
All right. What about the adult cereal business? I like that. I didn't even know there was an adult cereal business. That's a specific category, but I guess that is something you've got to focus on, Special K being what's special for Kellogg.
Exactly. I mean, in terms of the healthy adult cereals, they're the things that you tend to eat when you're a little older. There's also the kids segment, things like Lucky Charms and so on. The adult cereals market, I think, is really the sweet spot where you want to be over time. Ultimately, we have got this underlying trend of consumers shifting into healthier eating patterns. It's on a little bit of a break right now while the economy is bad, but I think over the longer term, as the economy recovers, that healthy adult cereal segment is going to be the place to be. And Kellogg, with the innovation that they've done around Special K, they've gained about 2.5–3 percentage points of share in the whole cereal category with a lot of those healthier products. Kashi has been the other big winner for them. I mean, that was nurtured from a $30 million brand up to over $500 million today, and that's over less than a decade.
And you still like to buy you say buy the stock right now?
Absolutely, yes. There's a lot of things going right for Kellogg right now.
All right, we're going to continue the conversation. We've got more in the world of packaged food. We're going to find out what other companies benefit from changes going on at Walmart. We're going to talk about Campbell's, as well as what is happening to the transformation at Kraft. Is it a stock that you want to buy? Come back and find out. This is Taking Stock on Bloomberg. I'm Pim Fox. And programming note, Taking Stock begins each weekday at 3 p.m. Eastern on Bloomberg 1130 a.m. This is Taking Stock on Bloomberg. I'm Pim Fox. I'm speaking with Alexia Howard, expert in the world of packaged food, analyst at Sanford C. Bernstein. Alexia, let's talk now about Campbell's Soup. Let's make the investment case for it, because the idea that they are going to be introducing some brands that are really relaunches, for example, Chunky, they're going to be launching that as a healthier soup, right?
Right, exactly. So Campbell's has been under a little bit of a cloud for the last couple of soup seasons. They've had a lot of commodity cost pressures. They've lost a little bit of share. Looks as though they're teeing themselves up very nicely for this soup season. The commodity pressures are off. The margins came up really nicely last quarter, and they're relaunching Chunky. They're basically launching a whole load of new product SKUs that have leaner meat in them, more vegetables. They're basically trying to make it more attractive for women that are buying these products for their husbands.
All right. Well, I guess that's the bet. What about buying them for their husbands in places like China and places like Russia? Is that taking off?
This is a medium-term opportunity. Campbell's has been launching these pouched soup bases, kind of broth products, into Russia and China. They did that in 2007, and they've been investigating those markets. Now, what's interesting here is that of the soup markets that Campbell's is in today, they only represent about 6% of global soup consumption today. But Russia and China already represent about 50% of global soup consumption, because everybody eats soup. It's just they make it at home. Now, the Russian opportunity, Campbell's did a deal with Coca-Cola Hellenic at the end of May.
That was that distribution agreement in Eastern Europe and Ukraine?
That's right. So instead of just testing it in 1,500 locations outside of Moscow, they're now going to scale that up to 34,000 outlets across the whole of Russia. They're going to increase the SKU count dramatically. And if that starts to take off, it's probably not going to contribute a lot to EPS this year, but I think investors could start to get excited about the story if the sales growth starts to take off at some point.
All right, now I'm going to shift gears. I'm going to ask you, we've got about a minute left. Tell me about what's going on at Kraft. Is Kraft still the top idea?
Absolutely. Finally, Kraft has come out on their last earnings call and said, you know, we're going to show you a plan the week of Labor Day, so it's coming up. We're going to go into detail about how we're going to get back to mid-teen operating margins by fiscal 11. So this is within the next 2 years. This is a company that's been under-earning for a number of years because of some bad investments made by the previous management team. This new management team over the last 3 years has been reinvesting behind the brands, finishing their restructuring program, doing a lot of the right things to get the business ready to go. The margins have started to improve in the last 3 quarters, and basically they're telling us, you know, the EPS growth is going to pick up nicely over the next 18 months or so.
All right, but we've got to wait until that Labor Day announcement to get the details from Kraft.
That's what I would be keeping my eye open for.
All right, I want to thank you very much, Alexia Howard, coming and giving us a little look into what's going on at Walmart with their merchandising and talking about what's happening at Kraft, as well as Campbell's Soup and Kellogg. Thank you very much. All buy recommendations right now,
Absolutely.
by the way. All right, thank you very much.